Welcome to the B.F. Anderson Technical Report for January the 6th. 2016 was an incredibly volatile year. Now I have a graph here of the S&P 500 where I stopped the graph in February because I want you to notice something. 2016, now this was brought to my attention by some Citicorp analysts, was considered an outside year. Now, what an outside year is a term used for a very rare circumstance. This has only happened 2 times since 1935, and each time it has happened, it was the leading year for a multi-year bull market. For example, in 1952, Truman's leaving as president, Eisenhower's coming in. The market rallied from 1952 all the way up till 1966. 1982, you had the second outside year. Remember now, only 2 times. It's extremely rare. So you had Carter leaving, Reagan coming in, and from 1982, the market marched higher for 19 years till 2000. Now, what an outside year is where you have the years where the indexes are outside the range of the prior year. So 2015 had a range, and in 2016 in February we broke the lower end of the range, and I'll show you here in a minute what happened after that. But let's kind of go back and just kind of look at where we have been in the last, say, decade or two. In the early 2000s, late 90s, early 2000s, we had a major bull market, ended in a bubble with the, everybody hated the market in 1998, but then they loved the market in 2000. People were saying it would never go down again. We then, if you notice here how the formation came down and formed a lower low below the prior low, very similar to what we had here in February. After that happened, the market dropped 47%. That was a major bear market. Then we had a recovery. Then 08 comes along. You see the same pattern where you're breaking below the prior lows. The market then dropped 55%. So when you're looking at a formation like this, which we saw in 16, you've got to be defensive. You've got to take action, which means, stop buying, raise cash, just avoid being too aggressive in that period. Now, if we jump forward and we go to the end of the year, you can see what happened. This is the outside year. We broke the downside of the range, and then boom, like a 180-degree turn, we then broke out and making new highs. So it was a super fake out. It was a volatility that we haven't seen since 2008. 16 was the most volatile year since 2008. It was one of the most volatile years in history. So what we're trying to say is that this was 16 looks to me to be somewhat of a transition year. Now, we've talked in the past about animal spirits. Now, what animal spirits is all about is where investors stop being so fearful and hating the market so much, because look what happened during the year. Now, this, by the way, this is the financial sector, which is mainly the banks. You can see what's happened to them in 08, started a recovery, and then went back into a bull market, moved sideways now for 3 years, and had a major drop in early 16. So financials pretty much had a bear market, but then look at the breakout, really strong breakout. Now that is what we call animal spirits. It's basically where investors start to say, I believe in the future of the country. I believe in corporate earnings. Earnings are starting to improve. Therefore, I'm going to do something different. Now, if you go back and look at the market in February of 16, the leadership of the market was things like electric utilities, municipal bonds, treasury bonds, international treasury bonds, consumer staples, things like toothpaste, tobacco, just basic everyday stuff. These areas here would be considered fear assets, the exact opposite of animal spirits. Now, if we move to the next graph, it is amazing to me how rapid this transition has been. Now, this is the Russell 2000. Now, I know that most people feel that this is all happening because of the election. I somewhat disagree. I think that corporate earnings have finally turned the corner after 2 years of being in an earnings recession. So all of a sudden, here we go, December of 16, the leadership totally shifts. We go from things like utilities, bonds, and consumer staples. Then by the end of the year, it's coal, steel, mining, small caps, semiconductors, banks, copper, transports. Now, this hasn't been an easy period because, and by the way, this is the Russell 2000 Small Cap Index. These are small stocks. You know, back to the animal spirits thing, people want to find something small that can become big. So as you can see here, the small caps have moved sideways for 3 years, and then in early 16 had a 27% drop, but then totally reversed and have broken out. So basically, in conclusion, it looks like we're moving from fear to greed, and 2016 looks to be a turning point where we more than likely are going to be moving into a multi-year bull market. We're very bullish. If you have any questions, give me a call. Thanks.